Welcome to Investors Insights. The first thing we want to do today is say thank you to all the veterans. Thank you for those who have served, who are serving, and all the families that have made the sacrifice. A special shout out to our very own Felicia Ludlam for her service.
Yes.
We thank her and again, all the veterans out there today. And so, guys, turning to the market, a busy week. Big news is going to be tomorrow. President Trump will be speaking to the Economic Club in New York. Hopefully get a better idea of what his stance is on the updated trade war talks. Last week, they were positive, and then President Trump on Friday said that he wasn't agreeing completely to some of the terms that the Chinese had made. Market traded back a little bit, but then came back up. So again, it's the back and forth. And so tomorrow on Tuesday, Trump will be speaking, hopefully get some clarity there. Then also, something to point out is the trade war is not only impacting the U.S. and China, it's global. And we're starting to see that in Europe's mainland as Germany is technically now in a recession. So 2 quarters of declining GDP. But good news is that France for the first time in years is now the region's economic growth engine. So interesting news out of there.
Yeah,
Ashley,
unexpected.
talk more about the trade war.
Sure.
Just a little bit there.
Yeah, part of the reason, as Bobby was saying, it has been a little bit more positive lately, is that we're getting a little bit more leverage coming up. In that the last round of tariffs that we're going to put on the Chinese, if we do, would be in December to the tune of about $156 billion, mostly on electronics and toys. You know, that would hit them hard in terms of what they produce at a time of year where that's important as well. So part of the reason you're probably seeing a little bit of movement on their side is they know within a month they've got another round coming up that would hit them pretty significantly. That's the main thing on the trade.
Right. And then also talk about Fed Chairman Powell.
Yeah, actually on Wednesday we're watching that too. Fed Chairman Powell is going before Congress, the Joint Economic Committee. This will be his first time doing that because last year when that was scheduled, President Bush passed away, so that had to be canceled. But you're going to have a very in-depth discussion up on Capitol Hill by him about the economy and how the economy is looking. So as juxtaposed with the Chinese international, obviously that'll come up a lot. We'll see a lot on the domestic too. So there's going to be a lot of information that has collapsed into that talk we'll be watching.
And I'd say over the last year, the job approval rating of Jerome Powell, especially on Capitol Hill, has gone way up. This time last year, I think everyone was kind of, putting a dunce hat on him, calling him, Jerome Powell's making big mistakes up there. And since then, we've cut rates 3 times. We've seen the yield curve no longer calling for a recession. This week alone, the 10-year is sitting at 1.93%, while the 3-month bond is at 1.5. The 10-year yield has gone up 40 basis points over the last month, while the short end has come down about 20. So that shows that Jerome Powell's actions, but the bond market is saying, good job. We may be avoiding a recession. Probably a lot of the talk about the China trade deal helps that as well. And then earnings are kind of coming in a little lackluster. I think the third quarter is about to come to a close. The market's now expecting a 1.3% year-over-year decline in the third quarter, a slight decline in the fourth quarter to give us a full year of about 0.7% increase in earnings. It's good, better than a decrease, but not a lot of strength, especially when you see the market up so much. That makes the S&P look very expensive from an earnings standpoint. Historically speaking, 16.4 times earnings is what is a traditional price. It's trading at around 18.1. So a little expensive, but if we get a positive news in the fourth quarter on trade, some good news on interest rates, you could see earnings pop in the fourth quarter. We get a surprise and makes the market a lot more cheaper going forward.
Yeah, and that's big news. Again, anytime that the President Trump or the Chinese delegation talk on trade or Fed Chairman Powell talk,
yes,
we pay attention and we talk about it all the time because that's what truly moves the markets.
That's definitely,
at least especially this year. So again, thank you to our veterans. We hope everybody has a great week. Please call us if you have any questions. Have a great week. Thanks.